Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high-energy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at noon and 7 p.m. Eastern Standard Time. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. In today's videos, ladies and gentlemen, we're going to go over a bunch of things. We're going to go over certain indicators that you can look at that will probably assist you, or at least what I use to assist us in making decisions in a macro environment that pertain to XRP. One of my lovely rants that everyone's come to love, and just overall what's basically happening and what I think you guys should be paying attention to and what we're paying attention to, okay? So, ladies and gentlemen, I wanted to start off today with first, I want everybody who holds XRP from around the world to drop a comment and tell us where you're coming from, what country. I want to hear from you. And I want to hear your opinions about leverage. Do you like leverage or not? Okay. Today, we're going to talk about something that almost nobody in crypto ever talks about. When cities design water systems, they don't design them for a normal day. They design them for droughts, floods, population growth, and emergencies. The pipes aren't sized for convenience. They're sized for pressure. And the public almost never notices them until they fail. That's the lens you need if you want to be understanding XRP. Because if you're still asking why isn't the price moving yet, you're still asking the wrong questions and looking at it through the long lens. The real question is this: what was this system built to do when stress hits the global financial network? That's what we're going to break down today. Now, before we go to any further, this is not financial advice. This is educational content. It's meant to help you understand how financial infrastructure is designed so you're not reacting emotionally to price. Ladies and gentlemen, your engagement helps this video reach more people, so please like, always share, and comment, and subscribe, and let me know. Are you looking at XRP to trade, or are you looking at it like infrastructure? Most retail investors look at assets from the outside. They look at charts, candles, price levels, short-term movement. Institutions don't do that, ladies and gentlemen. They look at assets from the inside out. They ask, what problem does this solve? What happens under stress? Can it move value at scale? Does it still work when markets become unstable? That difference alone explains almost all of the confusion around XRP. Because XRP was never designed to behave like a speculative asset first. It was designed to behave like financial plumbing. The part of the system you don't think about until it stops working. And once you understand that price action stops being the primary signal, function becomes the focus, ladies and gentlemen. Here's something most people miss. Large financial systems don't collapse because price fall. They collapse because money stops moving. Settlement slows, liquidity fragments, slippage increases, counterparty risk explodes. At institutional scale, those aren't inconveniences, ladies and gentlemen. They're catastrophic failures. That's why institutions define value very differently than retail. Retail asks, what can I sell this for later? Can I sell this for later? What can I sell this for later? Institutions ask, can this asset carry massive flows without breaking the system? And is this legal? XRP wasn't engineered to answer that question. It's not equity. It doesn't represent ownership in Ripple. It's a liquidity instrument. And liquidity instruments have constraints most people don't think about. Here's one of them. When volume increases, the system must scale without friction. XRP has a fixed supply, ladies and gentlemen. That means it can't support larger flows by creating more units. The only way it scales is by each unit representing more value. That's not speculation. That's system design. So when someone asks, why is XRP still around $2, right now around $1.89, they're still thinking like a consumer. The system is asking something else entirely. Can this asset support global liquidity when pressure hits? And that's why build-out always comes first. Price responds last. Now let's talk about certainty, because this is where regulation is widely misunderstood. In moments of financial stress, decision makers don't look for perfect solutions, ladies and gentlemen. They look for usable ones. They ask, can we legally use this right now? Will settlement finalize? Does this reduce risk or introduce it? XRP already answers one of the most important questions institutions care about. It was ruled not a security. That doesn't mean every rule is finalized. It means uncertainty was removed where it mattered most. In crisis environments, certainty beats perfection every time. That's why infrastructure assets don't explode in price overnight. They get quietly positioned before they're needed. Ladies and gentlemen, if you're looking at the last 48 hours in the markets, you're seeing a bloodbath. You are. You're seeing things converge in ways that we've never seen before. I hope everybody has not been cut up like sushi because the chum's in the water. And this is everything I always say about position size is the most that matters. Jesse Livermore. Our research, our metrics, our discipline, our clarity, our conviction. Leverage definitely helps you get cut up like sushi, and you're not Gucci. So this is for everybody right now. I need you to understand why you first started in this market, the convictions you have, and where you're going to go, okay? Because to me, the red days, the chum days, when people are getting cut up like sushi and the water has become chum, and the chum's in the water, ladies and gentlemen, this is when we, as the remora that I told you about, we're swimming underneath the sharks and we're getting free meals. Because this is us scooping up what other people have won. And when leverage traders have won, you know what they win? They win a tax write-off. They win a realized loss. They realize that they're selling something that they shouldn't have bought in the first place at a higher leverage model and margin. And they got cut up like sushi because they had no rules, they had no plan, they had no metrics, they had nothing. They're sushi. Thank you for playing. Don't pass, go and collect $200. Okay? So the chum's in the water right now. But I want you to understand something, right? Okay? I look at XRP, and this is me personally, I look at XRP as oil. Ladies and gentlemen, I've been doing physical concession development for the last 2 decades, taking things out of the ground, developing concessions, whether it's precious metals, whether it's fossil fuels. We take it out of the ground. When we start developing a concession, we don't worry what the underlying asset's doing. It's going up or down because it's a commodity. It has an intrinsic value, right? So here's my example. You think the major oil companies, when they start building refineries, worry about what's going to happen with oil? They know oil is there. They know its price. It's a commodity. It's going to go up and down. But they're looking to make money after they refine it and further downstream. So they're going to build the infrastructure. So when you start building a refinery, okay, whether it's light, sour, sweet, whatever you're building a refinery to refine, you're not worrying about what today's price of oil is going to be. You're worrying about future demand, future consumption. You're worrying about downstream, okay? You're worrying about that. I need you to look at XRP like oil. I don't want you to look upon it as gold. I know people are talking about that. If you want to look at it like that, that's fine. I want you to see the way I look upon it. I look at XRP like oil. It is the demand is there for you. It's going to be consumed and it's needed further downstream, okay? But again, look at St. Croix. St. Croix has one of the largest refineries, okay, in the Western Hemisphere, right? And, it's passed from different ownership along the ways, right? But it's there and it's needed to refine oil. It's very, very important, okay? So they know that oil's in the ground. They know that it's needed and things are going to go through there. So they're worrying about what's going to happen later down the road. So they're going to build out infrastructure. They're going to do what they need to do. So now how do I bring this back in with XR being priced like oil? Because we see infrastructure being built around it. Look at the acquisitions they've made. Ladies and gentlemen, my God, do you understand that the DTCC, the OCC, all these major players in the world, in the Mariana Trenches, they're moving and positioning chips and pieces on the chessboard and the checkerboard, more like chess, pieces on the chessboard for the future. It's in play. We got the unit going against, the dollar. This is here. And ladies and gentlemen, the unit is not a currency. It's overall, it's a system of trade. It's not worrying about what things are going to be. The unit's not trying to be a reserve currency. The unit's trying to equalize trade. So there is no reserve currency anymore to tackle the world. That's really what the unit's trying to do based on why it was almost adopted by the Bretton Woods, but it wasn't. Okay. So getting back to where we are right now. Okay. And I want you to get that Gucci clarity back. I want you to understand. And we're going to go over some more indicators about what helps us understand and see why things are going. But these days when things are down, we accumulate. I accumulate. I tell people when there's blood in the streets, you're taking advantage of that, okay? You are taking advantage of that. And you have to have the conviction of why. If you're a chartist and you're looking at a chart, then you have to have when you're getting in the trade and when you're getting out of the trade. It's not I get in the trade and I stay forever. You have to have a conviction of when you're getting out. Like Jesse Livermore, right? Your trade size has got to be so small you can get cut up, added, carried, whatever you got to do, you got to add to it, right? But you have to have the conviction of why you're in this and why I want you to look at XRP as oil. If you own the ground where the oil's in, you have future money. XRP is a commodity now, right? That a whole infrastructure for consumption and demand is being built around for the future. So you're watching this go up like a bridge that's going to bridge areas, like when that's what you're watching right now, okay? But you got to have the conviction right here, right now, okay? We're seeing things happen in the metals market that I can't believe. In my lifetime, what we used to do, the first macro prop desk that I ran, we took advantage of something called squaring off. I would see traders in one time zone go to work, buy at the opening, and sell at the close. Right? Well, we saw that there was a 30-point difference that we could take advantage of where someone was long the whole day. They're going to sell that day because they were a day trader, and we would basically take advantage when they're realizing their gain and they're squaring off the position at the end of the day. We took the opposite side of that transaction, and we did really, really well with that. We were doing that with multiple Forex pairs, multiple commodity pairs. We were watching that happen right now in silver in Shanghai. You know, they had to basically up the margin requirements because JP Morgan just reclassified how they're classifying their metals, okay? A lot of things are happening right now. We're seeing things happen. Silver hitting $66. We're seeing things change right now that's unbelievable, right? So this is an amazing time to be alive, and you got to remember why you're doing this. You know, there was a great thing. Barrick Gold got their mine back in Mali, so that's a good thing probably because they're going to go public with that mine on the U.S. Stock Exchange. But again, convictions, right? You know, I don't have enough time to do all this. I wanted to, sorry the video's late today, but I wanted to be with you guys today when the market's looking red and everything's going down. And you got to remember why I tell you to write down your plan, write down everything, okay? Why we have a map that we're going to add to. But if you look at your plan, I'm having you writing down, you know where you're going right now, right? And I need you to have any kind of vexing thought. I need you to turn your mind to steel. I need your stomach to become iron. I need you to be built to bricks and not sent to the mines. I need you to understand why you got in this, okay? Trying to sit here and pep you guys up and understand why you got in this and why XRP is oil and why the oil companies don't care where the price of oil is going. They're going to continue to build infrastructure around it. That's what they're going to do, the same way I've always been doing that with mines. I didn't care where the price of copper, platinum, palladium, silver, and gold was going. We're building. That's just what it is, okay? And about a couple more sections, we're going to go over these indicators that I want you to understand that help you have a pin and see what's happening. XRP's price is not broken, ladies and gentlemen. It's being controlled. It's being controlled. Now, this is where I want to slow things down because in my personal opinion, this is my opinion. This is one of the most misunderstood parts of the XRP story. A lot of people look at XRP price and assume something must be wrong. They see expanding institutional conversations, ETF demand, Ripple continuing to grow, partnerships with banks, payment firms, and stablecoin issuers. And then they look at the chart and say, why isn't the price reflecting any of this? In my view, the price isn't broken. It's being controlled. And there's a difference. XRP has remained range-bound even while the ecosystem around it continues to mature. Still trading well below previous all-time highs, and to retail investors, that feels frustrating. But to institutions, that kind of behavior doesn't signal failure. It signals accumulation, quiet, methodically, intentionally. Now, in my personal opinion, again, this is my personal opinion, institutions are never going to tell you what they're buying and why they're buying it, okay? Because if they did that, the price would immediately move against them. For institutional perspective, that would make no sense. If you're trying to build a meaningful position, the last thing you want is public confirmation that triggers front-running and retail FOMO. That's why silence isn't accidental, it's strategic. Now, for those who may not be fully up to speed, this next part really matters. Several XRP-related ETFs launched back in November, and they didn't come out quietly. Investor interest was strong almost immediately. As of now, spot XRP exchange-traded funds have crossed $1 billion in net assets, with total inflows sitting just under that mark, roughly $990 million, ladies and gentlemen. And now, again, in my personal opinion, that number is so important not because of hype, okay, but because of what it represents. ETF flows are transparent, they're visible, and they're measurable. When I run the numbers myself using basic market cap multipliers, flows of that size start to imply something very different than what the current price reflects. I've said this before and I'll say this again. That kind of money doesn't align with a $2 asset. In my view, inflows at that scale point towards something closer to $8 to $10 XRP, okay? But simply based on liquidity mechanics and supply constraints. And here's the key point. If ETF demand continues, the entire dynamic changes. Quiet accumulation becomes public buying. Private positioning turns into visible demand. And when that happens, the spot market doesn't have a choice. It has to catch up. That's when price discovery stops being theoretical and starts becoming mechanical, ladies and gentlemen. So why does the market look suppressed now? Again, this is my opinion, okay? There are a few clear reasons. First, much institutional buying happens OTC or inside ETF structures, not on public exchanges. Second, deliberate secrecy prevents front running and keeps price movements muted. Third, fragmented narratives across multiple chains dilute attention and slow sentiment buildup. And finally, short-term selling still exists. Some participants sell into rallies, creating offsetting supply. Put all that together, and what you get isn't a broken market, ladies and gentlemen. It's getting a managed one. And this brings us back to the bigger picture. Ladies and gentlemen, retail watches charts, institutional watch systems. Retail wants excitement. Institutions want reliability. When you change your lens, silence stops feeling like failure. Institutions look at macro. They don't look at charts. They're not chartists. Patience stops feeling passive, and you stop waiting for price to validate what structure has already been telling you, because you're no longer reacting. You're positioning, okay? Ladies and gentlemen, long-term holders, they're cashing in right now, okay? You have people who have accumulated XRP at prices well below current levels, and they're offloading, and that's beginning to happen. And when that starts to happen, that's a snowball effect, okay? You had for instance, there's an XRP wallet that was dormant for 7 years old. It accumulated tokens around 40 cents. Its realized gains of over $721 million on December 11th around the $2 level. That sale came at precisely the moment that momentum stalled, reinforcing resistance rather than absorbing it. On-chain data from Glassnode confirms this was not an isolated trade. Profit realization has accelerated since early autumn, with realized gains surging roughly 240% since September. As a result, daily realized profit has climbed from approximately $65 million to nearly $220 million, even as the spot price market tends lower, ladies and gentlemen. This marks a shift in behavior. In previous cycles, long-term holders typically distributed into strength. However, the current pattern signals a desire for balance, sheet protection, with early entrants selling into a fragile market. This has left XRP's recent buyers largely underwater. So there's a little natural demand to absorb this supply, unfortunately. There's not really much natural demand, resulting in a heavy tape where every round of selling pushes prices to new lows. Now, this is important, ladies and gentlemen. Please pay attention to this part if you're still with me, and I hope you're still with me. Market deleveraging. At the same time, XRP's derivatives market is stepping away from high leverage. Data from Binance estimated leverage ratio. The estimated leverage ratio is very important, ladies and gentlemen. Write that down. Estimated leverage ratio for XRP has fallen to around 0.18, one of the lowest readings for the current period, and a sharp reset from levels seen during the rally above $3. A falling ELR means a larger share of open interest is now backed by collateral rather than borrowed funds, okay? Let that sink in, which usually reflects the closure of reduced or leveraged positions. Leverage traders are getting squashed. They're getting cut up like sushi. They're not Gucci. They're becoming accumulation for people like us, the Remora. We're basically accumulating for the future because we look at this as a commodity like oil. This type of deleveraging often follows volatile swings or sharp liquidations as traders tighten risk and clearing out marginal positions. For XRP, the move lines up with the October 10th shock and subsequent period of choppy price action. Lower leverage reduces fragility because fewer positions can be forcibly closed by sudden price spikes. Let that sink in what I just said, okay? That lowers the probability of a cascade liquidation. If leverage has been already chopped up and out of the market, there's not a lot left to really push us parabolically less, which are common during parabolic rallies in altcoins. In the short term, it also means less speculative fuel, okay? Unfortunately. With fewer traders willing to take leverage exposure and long-term holders already realizing gains, the path of least resistance has been lower as the market searches for a new equilibrium. If liquidity eventually returns under these low leverage conditions, future upside may unfold more orderly. For now, the market is still rebalancing. Liquidity drains away from altcoins, ladies and gentlemen. This is very important again, too, okay? Finally, the current crypto market structure completes the bearish picture. XRP's weakness is unfolding amid shrinking volumes across the altcoin complex and a renewed concentration of liquidity in Bitcoin. This shift is evident on Binance, which remains the deepest venue for XRP trading. Okay, according to the data, the take-or-buy volume in XRP futures, a metric that tracks aggressive buying orders, had just dropped from a July peak above 5.8 billion to around 250 million. This represents a 95.7 collapse in active buying, showing how sharply demand has faded. Over almost the entire period, the take or buy sell ratios remain negative, indicating that sell orders have consistently outweighed buys in the derivatives order book. Moreover, the broader altcoin market also continues to live in the shadow of Bitcoin's liquidity pool. As investors crowd into the largest crypto asset, less capital circulates throughout the rest of the market. That dynamic has been reinforced by repeated liquidation waves and lingering caution after the October 10th event, which left many traders wary of adding fresh risk. Ladies and gentlemen, this kind of environment, phases of volume compression often end with volatility returning. But the current configuration gives XRP little cushion. So with XRP's buying interest thin and derivatives flow skewed towards the sell side, a deeper correction cannot be ruled out if another macro or market shock hits. If you want to get a better understanding of structure, cycle, risk, and decision-making that's not chasing headlines, when our Discord launches, please do sign up, okay? This isn't about one asset. It's about how you operate across all cycles. If this resonates with you, this style, please do sign up when it comes out, because there's only so much that I can go into in these short time periods. And unfortunately, I haven't been with you guys in 48 hours because the markets have been on a tear, and I can't tell family offices, oh, by the way, I got to go make a YouTube video, even though I want to be with you here today, guys, when the market's getting hammered. Okay, I can't, we're going to have a lot more discussions. And for everybody that joins the community there, you're going to have access to myself, our team in different offices around the globe to go over everything. And there's just some things that legally we can't discuss here through this platform, unfortunately. Your engagement always helps us get this information in front of more people. So I thank you for taking the time, for tuning in, liking, subscribing, and sharing your thoughts. I want to hear what everyone is from XRP. For all XRP Army members all over the world, please chime in where you're commenting from. I love to see where people are. Your support allows me to keep bringing these deep dive, high value insights to the crypto community. Ladies and gentlemen, have a great day. As always, stay emotionless and watch XRP closely. This could be a defining moment. And I want you to remember those indicators I'm talking about. It helps me paint a macro picture, okay? It does. That's why I don't worry about where we're going. I worry about how much the demand and consumption is coming. I worry about the unit going after XRP and the dollar, stable coins and treasuries, the unit commodities. I worry about what's happening. I worry about the reclassification of metals. I worry about the coordinated attack on the U.S. commodity markets priced in dollar. That's what keeps me up at night. But I know we're going to win the end, okay? This content is for informational, entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making investment decisions. Remember, the game is changing, and those who understand it first will benefit most. Make sure you're on the right side of it. You have two choices. You can be like the crowd reacting after the move, rationalizing why they missed it, telling themselves they'll never happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes. Smash that like button, ring the bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you contents, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic.